Good morning, everyone. And thank you, Jack, for the opening remarks. It, uh, it really set the stage on your reflections on 2024 as being the year of alignment, intention, platform building. It set the tone we need as we turn the conversation forward. As Jack reminded us, the Dubai Future District Fund is not just a vehicle for capital deployment. It's a government-backed platform committed to stewarding a future-facing innovation community and economy. But as we enter 2025, the year of the community, DFDF's roles does evolve again. This panel is designed to expand on two key messages that Jacques emphasized on. That innovation is communal. It thrives in networks, in open exchange, and through shared infrastructure. That government capital and aligned capital can play a unique role in not only catalyzing sectors like AI, health tech, or prop tech, but in shaping the connective tissue between policy, investment, and global visibility. This panel is not about where we deploy capital, it's how we unlock value, build trust, and construct the architecture of a venture ecosystem that reflects the ambition of the Dubai D33 economic agenda. And to unpack that vision, I'm thrilled to be joined by three leaders who bring distinct vintage points from an LP world, from founder networks, and from global fund-to-fund benchmarks. We heard from our moderator, our MC, sorry. We have Anulika, Ajufo, board member, HarbourVest Global Private Equity, and two gentlemen that I missed the queue on with shoes. Mr. Jeff Harbach, founder and managing partner of Harbach Venture and a blessed member of our IC, and Fadi Ghandour, executive chairman at Wamda Capital. If you don't know me, you must be in the wrong room, but pleasure to be here. We often view government-backed funds as financial instruments, but DFDF's impact lies just as much as it does in strategic signals it sends and the institutional confidence it builds. Maybe if I started the questioning with you, Jeff, how does government-backed capital like DFDF reshape early stage markets in your view and differently than private LPs in general?
Well, first, thank you so much for having me. I mean, I absolutely love my time coming to the UAE and spending time in Dubai. The energy of this city, of this emirate, of this country is palpable. And I think the opportunity that this country has in front of it is massive. So I really look forward to every time that I come. Listen, sovereign wealth is a catalyst for ecosystems across the globe. It always has been. I think it will continue to be. It sends signal to the markets that there is capital that is going to de-risk the environment for private capital, for LPs to come in and invest in that region or in that ecosystem. But it also sets the stage for sovereign capital can be long-term patient capital, probably more than private LPs can be or more than private capital can be. So sovereign wealth and sovereign funds are important in catalyzing ecosystems. And we've seen this across the globe. And I mean, I think of Singapore or Korea, South Korea, or Canada or France, or I mean, you can point to each of these different ecosystems with specific entities that have catalyzed that ecosystem by investing in managers and then also by investing in direct investments in that area or in that ecosystem to catalyze growth. So that's what the difference between sovereigns and what the important role that sovereigns play in an ecosystem, and clearly the important role that DFDF is playing here in Dubai.
Fadi, if I go over to you, and based on the cue that Jeff gave us there, how does DFDF's presence impact the founder's ability to scale, attract capital in this region, and your view on a vehicle like DFDF?
Thank you. I also want to thank you for having me. I feel like I'm a fixture here. Every DFDF event, I sit on the panel, and I love it also. So
really incredible looking fixture.
Because, but I am really happy to be here and congratulate you on the shifting of the strategy also. And I had my good friend Khalfan has done an incredible job in getting the FDF fund to come to reality. We've discussed it for years, and it is. I agree with Jeff. It will, and it does make a difference. But my point, that I want to make in addition to Jeff's is that we need to think of the capital that comes from government or from sovereigns as infrastructure, right? If you want to have a venture industry, if you want to have an ecosystem for startups, if you want to create an economy that fits into the digital 21st century AI landscape, then you need capital, and capital cannot only come from the private sector, specifically because it is much more patient capital. It sends a signal. It sends a signal to the families here. It sends a signal to everyone else that the government is serious. It believes that in its own ecosystem. It wants to build its own ecosystem. And it has a different set of returns, as we had heard earlier. So it's not only about financial returns, as important as that is, but it is also about thinking that on the long term, we are actually building the ecosystem and the well-being of the city and the policies of the city or the country is also part of the returns. When you have VCs coming from outside, when you have families investing, when you have more startups, that is a return, and it needs to be looked at as such. So there is the wider ecosystem, not only our own focused ecosystem of startups and entrepreneurship, but is the country benefiting? Is the ecosystem of the whole city or the whole country changing? That's absolutely. And so that's why I say it's infrastructure. You cannot differentiate it from any other infrastructure that is being built in the city, and everyone will follow. You know, once you build it, and this is the story of Dubai, they will come.
Thank you for that. And if I turn to you, Anulika, from an institutional LP perspective, how critical is signaling to Fadi's point and this first touch approach when it comes to transparency in emerging markets, and where does DFDF stand in all of that?
So thank you, Nader, and it's such a pleasure to be here. I echo the sentiments of Jeff and Fadi, and just think that, I mean, I haven't been to Dubai for about 2 years, and in just coming, you know, just having not been here for 2 years, I see how further advanced a lot of the country is, be it innovation, thinking about just how open and accessible this country is to all, and I have to say that it's always a pleasure to be here. Actually considering moving here.
With open arms.
That's why we have you on the panel.
Okay, so to the point on, I want to focus on transparency because a lot has been said about signaling. And I think, you know, just on the point on signaling that Fadi mentioned, I think just having a sovereign-backed fund and thinking about national interest and commitment, it just sends a strong signal to institutional investors that Dubai is here for the long term and is here to stay. I think when you think about emerging markets, particularly where in economies where exits take longer, you cannot understate the value of patient capital. You know, institutional investors want to come in. They want to know that they have the right partnerships in the ecosystem for the long haul, because you don't want to come into an ecosystem and have to not be able to exit or exit at the wrong time. Timing is everything. And so the second point then is on just long-term alignment. I mean, sometimes, depending on the asset class, some of the factors or some of the key messaging that you want to look out for is, you know, market readiness, market confidence. You know, is DFDF sending a signal that this, as an anchor, for example, in investment opportunities, that there is this alignment for the long term across maybe primary funds, buyout funds, and when you look at asset gestation periods, for example, you want to make sure that there is that alignment there, that the fund structure is suited to the asset class. So these are the sorts of things that we would look at.
Thank you for that. And one of the messages I'm getting out here is direction setting. I'm just curious, maybe an open question to the panel around, can plurality of actors in MENA be a strength? Or I'm curious about your point of views around coordination and sort of the centralization of some of that, whether it's decision-making, capital deployment at a very high level.
Thanks. I'm happy to take it. Look, I think that diverse diverse sources of capital or plurality of capital, as you're talking about, are always good for an ecosystem. The more sources you have to support, especially, as we've said, patient capital, signaling capital, that this ecosystem is here to stay is good. That said, as there becomes more pools, all kind of serving their own different interests, there can be some inefficiencies that come with that. And so I think that in a place that is blessed to have multiple sources of capital, it's important to have coordination. I mean, there's so many things that I love about this ecosystem and this emirate and this country, but one of them is this, the year of the community. I think, naming 2025 the year of the community signals so many things about what matters to this country, and clearly as part of that coordination, supporting each other, what we heard from Jack, in each person kind of building from each other within a community is important. And so you see that same thing with capital.
And if I might just add to what Jeff has just said, and so fragmentation in itself can be a strength, particularly when it comes to fostering competition and thinking about specialization. And however, there are certain times when fragmentation in itself can be a real weakness, right? Particularly in nascent markets where, as you were saying, you have particular sort of inefficiencies in the market, collective action problems. You need more of an aggregator effect, somebody who can convene, orchestrate, and ensure that you don't have silos. Because if you're acting for the common good and you have specific problems to solve, you don't want that dissemination. You want aggregation, you want clout, you want collectivity to be able to drive the agenda and push change across different verticals.
But I'm still not clear on defining what the fragmentation or the centralization is. Nader, I mean, what are you alluding to?
So the lens there is more of a fund-to-fund lens, I guess, if I can frame
so
it that
moving
way.
to fund of funds.
Yes, correct.
Such. No, absolutely. I mean, there's no question about it, because you're enabling, you're enabling the VCs, you're enabling emerging managers, you're enabling the funds that have been here and have believed in the ecosystem here long before anybody was looking at them, really. So it's a sort of reinforcing the ecosystem that already exists. I think fund of funds is exactly the right, and then you can double down on the winners, the startups that are gonna make are already showing the results and need extra capital. Then you can do that, but the initial thrust should be funds, really, and they've proven themselves. I mean, they're as the oldest VCs in the region came out of here, so they've been around for a while. They've proven their experience, their knowledge. They're already in the third and fourth cycles of fundraising. So there is, once you're in your third cycle, you're practically talking about a relatively showing maturity in the market. So this means they've crossed their 10th year. And so there is the failures, the learnings. I mean, this has massive amounts of value. I mean, that's maturity in everything, but in our industry is to have experienced everything. Down cycles, up cycles, failures. Companies that have lost their way also. So this is all part of the must learning. And doing this as fund of funds is essential.
You're making a good point in that there's this axiom that it's really easy to get in a venture and stay in kind of 0 to 5 years. It's harder to stay in 5 to 10 years, and it's nearly impossible to stay in beyond 10 years because you have to actually have some wins to show for. You have to have some return capital, some DPI to be in beyond 10 years. And what you're seeing from this ecosystem is that we have a maturity in the fund managers that have gone to funds 3, 4, 5 because of the richness of the deals of the companies that are being built in this ecosystem, that you have maturity in funds, which enables a more fruitful ecosystem. Yeah.
Absolutely. And we must thank them because they've been supremely patient. Because, when we were emerging funds very early, back maybe 12, 13 years ago, it took a long time for returns. So we should thank the LPs that were patient. We should thank the VCs that were building the ecosystem here very early on for their patience and for their belief and for their perseverance in making it happen and raising a flag and eventually having DFDF and having the whole city, the whole country realizing that this is an asset class that is structural and that is strategic to this country. Strategic. It is not debatable anymore. I mean, I remember the days when we needed to convince the big sovereigns to do stuff here, and I think now that's finished. That is a story that is done, and our neighbors in Saudi Arabia have 55 VCs now in 4 years. So that's also saying this is infrastructure. They're all anchored by the sovereign, all. And this is taking also a page from the Singapore model. I mean, the Singaporeans have done it for a long time. And there's nothing wrong from learning. I mean, if somebody has done it, you don't need to reinvent it. You just go there, learn, and do what we're doing. Anyway, it's happening. I mean, we don't need to debate that anymore. I mean, it is here, and it's happening, and the future is even much brighter than what we've seen.
And on that point on strategic play, DFDF plays a catalytic role in what you're saying there, in crowding capital into whether it's undercapitalized but strategic sectors like the ones that are very well defined within the economic agenda over here with prop tech, health tech, mobility tech, AI, and circular economy. What does smart capital deployment look like in these domains? And maybe, Fadi, if I just circle back to you, of these 33 sectors, the economic agenda that I mentioned, the 5, which ones are, in your opinion, most venture ready? And what needs more groundwork, in your opinion, based on your pulse on the ground here?
I'm a believer that you need to go very wide and see what's working. I mean, I don't think that we need to bet on one area only. We need to bet in many areas like is happening now, and those that are emerging, you double down on them, and you're not. I mean, e-commerce is happening here. B2B SaaS is popping up now. AI is emerging. I think there needs to be a lot of work there because there's talent coming with AI here, and AI as a strategic direction of this country and this city is very clear. I mean, you were the first people to have an artificial intelligence minister and a clear strategy with that minister, His Excellency Omar Al-Ulama. And there is a clear strategy with that, but we're just seeing the early days of companies that are in that space. Maybe we need to double down on that. Maybe we need to know what does it take. Is there research in universities here? Is there IP coming up? I mean, this is stuff that again, it's been done before somewhere else, and we need to think about it. And I think there is already a movement towards how do you commercialize, how do you do R&D in universities, how do you eventually commercialize, and bringing in the big companies that have already done it. And then you have the people that are going to leave these companies and build their own businesses. I'm seeing some of the companies we're investing in are graduates of Google, graduates of DeepMind. These are people that came to this city because they wanted to live in this city and found an opportunity and are starting to building businesses. They are AI, they have deep AI knowledge. Some of them were teaching at Stanford and they came here. And this is what you need. Maybe the ecosystem is early in that here, but you can attract that talent from outside. And Dubai has proven that model time and time again. Talent will come here and you need to give them the enabling environment so that they stay and build, and the next generation comes with that. So, but you need to go wide, back to your question. So what is promising, what's not promising? I think VCs need to decide based on the deal flow that comes to them, where do they want to really focus? Most of the time, in the past 10 years, we were all generalists. I think now you see fintech companies that are fintech VCs, focused VCs, and it's all based on deal flow. It's all based on supply. And then we will respond. Capital will respond very quickly to that.
And proof to your point, amongst us are some of those expert VCs that are focused on specific sectors. Maybe if I turn to you, Anulika, in your opinion, how do you balance the strategic impact part of the equation that we're talking about here and investability in sectors of focus for expansion?
That's a great question, Nader. I think that tensions often exist with institutional and catalytic investors investing in emerging markets, you can make an impact case for most investment opportunities in emerging markets, in my opinion. However, it doesn't make every impactful investment investable. And so I'd say that the most credible opportunities lie at the intersection of a clear need. You need to see clear need. You need to see market alignment and scalability. Often you see, I often say that impact first doesn't mean return last. You can find highly impactful enterprises to invest in that would be scalable and generate credible returns. So I would like to say that, just taking each in turn, market alignment. So as an institutional LP, you'd want to see that there's regulatory clarity, that there's market fit. You'd want to see that, there's, infrastructure. So looking at the investment ecosystem, would ventures coming in complement or be able to plug into existing infrastructure? Is there market adoption? Is it adoptable at good price points? And for me, General Magic is always a case in point where it was innovation that was way before its time. So you can have something that's highly impactful, but it's just not the right time. And when you look at the commercials, it just doesn't stack up. I'd also like to say that when you think about impact, for me, investability goes up when you have public sector and DFIs who are willing to co-anchor demand or de-risk supply. So these are points that I'd always be looking for. And also you want to think about structural gaps that need plugging and how this can be achieved by funds like DFDF. So to me, a sovereign-backed fund like DFDF plays a critical role in being able to have that vantage view on gaps and being able to understand where the capital is best placed to act as a catalyst to enable fund flows.
And maybe if I turn to you, Jeff, on the back of that last statement, DFDF and its role, to Anulika's point, support the alignment with Dubai to a certain extent, but I want to get your view on how it can align with global capital trends and play that instrumental piece in between for the venture capital space. I'm curious about how DFDF can play that role between region and global.
Yeah, I love the point that you made about DFDF and organizations like DFDF helping to find gaps and fund those gaps. I think that's critical because if you look back at capital formation across the globe, when you think of, again, I think of places like Singapore, which was brought up, that's kind of a purely innovation ecosystem. GSE and Temasek spent billions of dollars getting that ecosystem up and running when they had a very small market, but they were trying to be the centerpiece for all of Southeast Asia. They were, for a long time, they were purely exporters of capital, and that was it. Then you see other models like the KVIC and others in Korea that say, we will invest, but you have to invest a certain amount of you have to come back in your fund and invest a certain amount of your capital here in this ecosystem. And that ecosystem might not be ready for that capital. Whereas what DFDF has, the opportunity that makes this so unique for this ecosystem, for the entrepreneurs that are here in this room building great companies, is that you are, the ecosystem here is investment ready. And so for global trends or global capital looking at this ecosystem, they see a sovereign wealth fund like DFDF saying, we are here to find the gaps, see where things are, where there are opportunities like PropTech, like the things that support the D33 agenda, and are able to then fund them and support them, and then attract institutional and private capital from the outside investing in this ecosystem because the companies are ready. This is a rich ecosystem that is ready for investment, that is not just one of the kind of emerging ecosystems from 10, 15 years ago where they needed to pull other strings in order to get capital here. Companies are attracting capital here, and that makes this opportunity unique.
And if we can explore a little bit further on what happens after investment, framing DFDF as not just a funder, but being positioned as an enabler, a connector, a trust builder. Maybe if I circle back to you, Jeff, on that last point you were talking about there, what can we add on as non-financial support, especially in emerging markets where we have startups here, we have an ecosystem here that's developing. And how can DFDF step in to enable that all?
Yeah, I mean, for an ecosystem to flourish, it needs a lot of things. It needs talent. It needs access to customers. It needs access to capital. It needs, sources of mentorship to kind of never take the wheel, but always sit in shotgun and say, hey, listen, I've been down this road before. I know, that it's raining and the road's a little wet. You might want to slow down coming into this turn. They need mentors like that. I think that this ecosystem is primed for that type of capital, and DFDF to be the aggregator of all those different voices. So the role that the DFDF plays in bringing all those different pieces together in an ecosystem, like what I love about this area, I've said this many times before, so if you've heard me say this before, I apologize. But there's this old axiom that says that the world is flat. And what people meant by saying the world is flat is that it was easy to connect across anywhere in the globe. And I think that actually there's a paper written that says the world's not flat, it's actually spiky. It's spiky around hubs of innovation. And in order to build great companies that are going to have global impact, you need to be connected to those hubs. Dubai is undoubtedly one of the global hubs and clearly a hub in the region. And so the role that DFDF plays is helping the companies that are built here, but also the companies that are moving here and the companies that are expanding globally to be able to connect with all the different resources, regulatory clarity, like Anulika mentioned, and the talent piece and the customer piece. If DFDF, not if, because I know that they are playing this role. So as DFDF plays this role, that is a massive catalyst for an ecosystem that brings an ecosystem together.
So excellent points, Jeff. I'd add two things that you need to bring a combined voice towards the regulator and government, and DFDF will help tremendously. So it's so essential because the ecosystem is nascent. It's very early. I mean, it's 10 years old. It's just starting to mature. And so it needs to have a unified voice, in my view, so that we talk about the common issues and challenges that we face as we're building the ecosystem here, and as new technologies pop up that the regulators don't know about or are not ready for. And so I would talk about an example would be the fintech industry and how the central bank is catching up. It's happening now, but that would add a lot of value from a DFDF when issues arise, and talking about the commonalities of issues and going out and addressing them together, because you don't want to have a fragmented voice here, and regulator likes to hear one side of hear all the issues together and solve them for everyone and not uniquely for someone versus other. If someone has access, but you need to have access for everyone else, and the DFDF will be the catalyst. And that number two, as we see from many countries, you need to carry the industry with you across markets to open markets for them. Not only the VCs, but the companies that are in the VCs that are in the city. One big element here is that whoever is building in this city is building to scale, not necessarily here. There's not this. We're testing our products here, we're proving them, but they're all going out to the region and to the world, right? And so a DFDF that is supported by the government here needs to also include these voices when in their challenges in other markets, as you as governments start talking to other markets about signing agreements of trade, signing agreements of commonalities, of the passporting for the fintech industry. I mean, it requires the VCs alone cannot do it and will not be able to influence anyone. But if there is that community speaking together with the DFDF leading that process, I think it's very essential. These are the challenges I see on a daily basis in some of the startups and some of the VCs. Essential.
And if I hone in on that, Fadi, the combined voice, the global sort of lens, and I just bring back Jeff's point about the world not being flat, but there being spikes. Do you see a specific role with these spikes where that coerced effort would take place, and or do you have a view on it being more
I mean,
flat?
the good thing about Dubai is it's already a hub. So if we don't, I mean, it's already recognized, right? So we don't need to over debate that and prove it. It's here, we see it, it's happening, and the ecosystem is bubbling, and there is no question. And it's part of a much larger economy cycle that is happening in the city. The change in the city is affecting everything, including our industry here. And so I think we just need to learn from what has happened in the past and harness everybody's energy towards whatever needs to be done to make it happen. I mean, that's my view of it. But are we a spike? Yes, we are a spike. Is that what you meant?
Yes.
We are a spike.
Clearly.
I mean, you look at the map of this industry, and there's a big flag that's flying from here.
When we were catching up yesterday, Anulika, we were talking about the role of awareness building, research, and going beyond what we're talking about here. I'm curious about non-capital enables like policy alignment that also affect global LP confidence. Is there a role for us to play in that space?
Absolutely. Nader, I think that there's a critical role that DFDF plays and should be playing as that ecosystem architect. I think DFDF has a vantage point and a unique advantage at being that institutional bridge. So bridging between private sector and public, and also bridging between regulators and capital markets. So essentially, DFDF utilizes its capital, its network, its know-how to build these bridges. Regulators speaking to LPs, speaking to investors, understanding where pain points are, understanding where enablement is required to ensure innovation is not stifled. And so you're seeing, for example, within maybe you have a regulatory sandbox and you have at the regulation frontier, DFDF coming in with capital to showcase and prove positive pilots and ensuring that there's enablement across procurement pathways. So taking innovation into public sector, into consumers' laps, and seeing that innovation thrive, I think that's also important. We also talked about access to public data. Startups need credible data to be able to build. And someone needs to also play that role and also provide the investment to ensure and enable public access to information and ensuring that there's transparency, which is a point that you mentioned earlier, which I didn't touch on. Investors like clarity. There has to be clarity, be it across regulation, across policy, across reporting. There's also a role that DFDF can play quite nicely in harmonization, ensuring that be it GPs or startups, if it's co-investments, are meeting global standards. And there are clear frameworks that institutional investors can have comfort in.
I'm curious if that can be expanded beyond sort of the direct ecosystem. There are key initiatives that were unveiled last year around the sandboxing initiative for regulatory support for innovation, an RDI initiative around granting the ability to create new innovation, to drive the research agenda. I'm curious about data, the point you're making there, and its part to play in sort of pushing the regulatory sort of needle forward as well.
So it's often said that regulation lags innovation. And so what you really want to see is a translator, right? And DFDF is best placed to be able to translate that whatever is happening in, whatever the pain points are of innovators to a regulator. So I think that's one key point to make. And I think making the information accessible and understandable. Because what you often see is, interested, vested parties lobbying regulators to make changes that are aligned to investment interests. But you want it to be for the entire ecosystem. It needs to be clear, it needs to be accessible, it needs to be balanced, it needs to be future fit and investment ready. And essentially the rhetoric has to be, the sentiment has to be that Dubai is open for long-term business and that all aspects of the ecosystem are enabling this long-term alignment.
And that a regulator runs fast because companies are coming and are establishing before they get regulated, and they'll ask for forgiveness later, you're not going to stop that. So Dubai has proven over the years that companies can come here before they get regulated, and they eventually engage and they get. I mean, Kareem is a case is an example here. Is that when they launched there was no regulation. The industry was completely new. So eventually, the regulator ran with them and actually engaged them, and it happened. And so we need the regulator needs to understand. I think Dubai understands it. Look at VARA. When the crypto industry started coming to Dubai, the regulator had to catch up to it because and that's taking advantage of it. So because once the regulator moves very fast, then you are keeping the industry here and not saying, okay, the regulator is not open for business. I'm gonna go find another city, and people will move. And so it's so essential because people are coming into this town, and there's a flood of people coming here. And so we need to make sure that when they come here, they stay because there's predictability about the engagement. Don't need to do it immediately, but there needs to be an open door that I am engaging, I am talking to, and they're listening, and they want to actually do something about it. That's so essential because in many other emerging markets, or in most of them, regulators have shut doors. It will take them years to get stuff. And that's why this city is a spike. Because there is an understanding that, specifically for us in our industry, is that this is a strategic industry. We want to make it happen. We're going to open our doors and we're going to make things happen. And that's why the DFDF is here finally. I mean, that's part of that conversation that has been happening for a while.
I just want to give one statistic. So with the increase in public access to research and data, you get to see an increase in startups around that innovation, just to that point. It's very important that there is increased access to public data because you will always see that innovation will happen around that. And also, just to the point on alignment of regulators with everything else, because the regulators are seen as the, sort of the bad actor, usually by innovators. But I think it can work quite well. And this is not an emerging market statistic, but it's one from the UK where I live. So the NHS.
It's probably an emerging market now.
Oh.
NHS.
Sorry, I didn't.
You didn't say that, Fadi. You did not say that. So the NHS England, the health service, for all its faults and flaws, about a decade ago launched the NHS Innovation Accelerator. And the aim of this was to spur innovation in health tech, okay? So on the back of this, they launched the digital health labs and then created procurement pathways to ensure that ventures were coming into market and being able to test clinical and economic value. And on the back of that, then they launched something called the NHS App Library. So all the validated apps and tech then had a place where they could go out and, they had this validation and certification from the government that they were in the market. The government put money behind this. They published papers around this. There was policy enabling this. They created the structured pathways to go to market. And on the back of that, you've seen innovation. You've seen interoperability and data security and all the different elements that need to go with health tech and digital tech coming out of this. Now, there's still a long way to go, but I just give that as an example of how the different aspects of an ecosystem need to come together to drive new innovation.
Just very quickly, I know we're almost out of time, but a macro point here that I'd want to emphasize is that entrepreneurs are the heroes in this story. They are the true innovators. They are the drivers that are changing ecosystems and building companies that are changing the world. And so the role that DFDF or any other organization plays is that of infrastructure. If the entrepreneurs are the drivers at the wheel, we are the ones that are helping them to make sure that the roads are clear, to make sure that they have a place where they can charge their vehicle or fuel up or whatever it is, where they can get an oil change, where they can have the laws that make sure that they can turn right and settle. We are the infrastructure, but it is always the entrepreneurs. The best ecosystems of the world are the ones where you find that it's not the capital providers that are the heroes. It is the entrepreneurs that have become the heroes because it's transitioned from capital to celebrating what entrepreneurs are creating.
So really, at the end of the day, it's good companies that give the good reputation of funds, not the other way around.
Correct.
So it's your companies that are giving you credibility, and VCs should always remember that.
Correct.
And good people. I think it's just to mention that point. We're talking about innovators and, entrepreneurs and, capital flows, capital formation regulators. We're talking about people. People make the world go round. And so DFDF is in the game of building credible relationships, trusted partnerships, and being front and center of enabling people to do what they do well.
Well said.
And with that, this panel wasn't just about capital, it's about confidence. Confidence that Dubai is structured, willing to listen to people, and strategically positioning this ecosystem. We heard today that a government-backed trust layer enables the alignment of capital, policy, and execution across the venture lifecycle. But that is how we together power the next chapter, not just for Dubai, but for the founders and ideas that we're talking about. They'll power the future. Please join me in thanking our esteemed panels for sharing their valuable insights. Thank you.
Thank you.
Thank you.